A consequential week for the economy, a Fed meeting, tariff deadline, jobs report. It's the busiest week for earnings this quarter. Steve Liesman is with us. He just gets excited on these Fed weeks. I can see it on his face. It's like a Grateful Dead concert.
Yeah, it's exactly the same, Joe. And there's drums in space and all kinds of wonderful things. Look, it is a very big week. We have the JOLT survey and consumer confidence, and of course, the Fed survey comes out tomorrow. I know you're on the edge of your seat about that. Wednesday, though, we have the ADP number. That's seeing kind of on the low side. Remember last month we were above expectations, but a lot of that was on the government side, just 82,000 expected on ADP. And then you also have GDP and a lot of interest in that. I don't want to get too wonky on this, but basically a lot of imports came into the country, but we didn't count them in inventory, so there could be some adjustments on either side, at least not as much as came in. And then you go to Thursday, you have the Fed's preferred inflation indicator, and then the big, what do we call it, the big kahuna, Joe, is that what we call it? On Friday, we have the unemployment report and non-farm payrolls, just 102,000 expected. But again, that's been surprising to the upside. So we'll see how resilient it all is. And I don't want to leave out, of course, the Fed meeting and the Fed announcement on Wednesday. Two potential dissents there from Waller and Bowman, and that's not happened for a very long time. They've had two governors dissent. Those are the ones who are in Washington down the hall. Their offices are down the hall from Powell, but apparently most economists believe they'll dissent. But we'll see what the Fed does in terms of incorporating that notion that the Fed could cut now, perhaps into the statement, into the outlook for a September cut. Take a quick look at the probabilities. There you go. Fed in play for July. But we also have the probability, 66% for September. And just looking at, I want to do July, 2.1%. So really very low probability for July. But then two cuts built in for this year, 67% for September, 63% for December. So I am very excited, Joe. It's going to be a great first set. And I will take a break of 30 minutes and come back and do the second set. And maybe, who knows what the encore is going to be.
Yeah. Two of them were Trump appointees, right? I mean, Austin has been consistently sort of, I don't know, I would use the word, what's the word I'm looking for? Reasonable about a lot of these. Ed Yardeni's laughing. August 1st, they got time. There have been other times where we would wait till the next week for the employment report, Steve. But they're doing it.
Joe, I think you're like me a little bit. You've been doing some of this stuff for a couple decades and you still don't get all of it. I'm not really sure why. Sometimes they seem to skip August 1st. I'm sure somebody will write it and explain it to me. Maybe I knew one time and don't get it. But August 1st is also the trade deadline, Joe, and I'm super interested in how all this affects the stock market. You can sit back and say, well, there's three elements to this. One was the idea there were going to be crazy high tariffs. That's been removed. The second was the uncertainty about what the tariffs will be. That appears to be being removed. The third element is the one that looks to be playing out more over time, which is, what are the economic impacts of all this? Is it driving up inflation? We've seen it in the tariffs. Will it weaken growth? Growth is expected to be on the weak side. We'll see in our CNBC Fed survey what the new GDP outlook is. But that's the third one. The stock market does not seem to be worried about this. There are some economists that are writing about the idea that maybe the stock market is a little bit divorced from the economic outlook. But then again, a lot of this seems driven by the outlook and the hope for tech.
Yeah. It's funny. We were talking about Roger Altman about people use the stock market when it benefits their argument or which side of the aisle they're on. They use it. When it doesn't, they kind of discount it. Kind of funny. Bond market, though, has been pretty well behaved, too, Steve.